Hey guys, and welcome back to the ASX Investor channel. What a past week it was. It seemed like all of the EV battery material companies were flying to high after high. They were led higher by many of the ASX Lithium stocks like Vulcan Energy Resources, Galaxy Resources, Core Lithium, and Pilbara Minerals. It's a fascinating period on markets. Of course, we know that there's been significant interest in the lithium sector, with many of the structural demand drivers picking up pace as the EV adoption around the world really starts to gather steam. But there have been some near-term catalysts as well that have led to renewed investor interest in the sector. In today's video, we're going to unpack them both. We'll talk about what's been leading to this renewed investor interest and what it could mean for the lithium sector and these companies moving forward. Before we dive in and discuss all things lithium, if you do enjoy the video, don't forget to give it a thumbs up. If you're new around here, welcome. We make daily videos, so make sure you've subscribed and turn your bell notifications on so you won't miss an episode moving forward. So with that context, it makes sense for us to take stock of it all, to take a step back, think about how the lithium sector is currently positioned. Macquarie Bank recently put out a note, and they tipped that the lithium price would continue to rise after warning of a perpetual deficit. This perpetual deficit discussion has been one that's really been starting to pick up pace recently, and we'll explore what that means throughout the video. Of course, we all know that at the back end of 2017 and leading into the start of 2018, there was a huge lithium boom. There was excitement, there was definitely exuberance throughout the sector, a lot of speculative behavior, and this led to excitement really culminating with lithium hydroxide prices around the $20,000 a tonne. Of course, throughout 2018 and then 19, there was a bust for the sector. The prices came all the way down to $5,000 a tonne for lithium hydroxide. The sector lost a lot of its excitement, and many of the projects that were previously planned were either canned or delayed, as the economics just didn't add up. However, over this past period, and we'll have a think about what have been some of the drivers for this, there's been some renewed interest. The lithium prices have started to rise again, and now there's a lot more excitement coming back into the sector. And so where do we sit now? As you can see the chart here, this is the lithium carbonate chart, but of course the lithium carbonate and lithium hydroxide charts move in a relatively correlated manner. You can see here the big boom that came into the back end of 2017 and then the bust that followed over the next couple of years before renewed interest at the back end of 2020. A lot of this was catalyzed and centered around Joe Biden's election win. We know that the Democrats are really progressive and looking to push this transition towards electric vehicles and renewable energy. But of course, it was building up over the past period around the world. We know that there's been government support led by the EU and many other nations around the world, which are looking to implement subsidies and incentives to really drive this electrification of the fleet. We also know as well there's been a focus on localization of supply chains. A lot of lithium is currently imported, particularly from China, but from other regions around the world. But throughout 2020, with the atypical year that we had, there's been a renewed focus on localizing supply chains, which builds out resilience in your local supply chains, which means that if there are disruptions, you're going to be less affected than if you have to import them from other nations. So this is meaning there's going to be more investment locally, onshore, in different regions. And of course, this leads to longer growth runways and the potential for many other projects to come online. And then having a think about the economics behind commodities. They're of course driven, like many other things in the world, by supply and demand. There's an interesting dynamic at the moment with demand continuing to pick up pace and rapidly, even faster than many of the initial forecasts. We know that the EV adoption is picking up pace. Tesla has really driven this, but many of the other EV manufacturers and manufacturers around the world are starting to fall in line as well, which is leading to a tighter lithium market. And then on the supply side, there's a supply shortfall because of these project cuts that we previously discussed. Of course, with lower lithium prices, with a lower commodity price, many of the economics for the actual projects might not have stacked up. So projects throughout 18 and 19 were not coming online at the rate that they needed to be. And so as a result of this, we're at a stage now where many of these companies are starting to try to pull these projects online and bringing them on as fast as possible. But with demand continuing to pick up faster and faster, we're starting to see a supply shortfall, which is leading to previous notes like we saw with Macquarie, discussing the potential for a perpetual deficit as demand continues to outstrip supply. We'd love to know your thoughts, so drop in a comment below what you think about the lithium sector, what you think about this supply-demand dynamic, and which companies on the ASX or around the world you're looking to play this EV battery materials trend moving forward. And so with all of this backdrop, what does it actually mean for the sector moving forward? We had Credit Suisse, another one of the global investment banks, recently put out a note that stated lithium demand might treble by 2025, which is not that far away, within the next 5 years from 2020 levels. There's a huge amount of projects that are starting to come online, but of course, there's so much demand starting to pick up pace that the question is, will this be enough? You can see from this visual here on the right, the growing graph on the green is global demand, while the grey bars that are increasing is supply. You can see that supply is starting to come online and will continue, but demand, as forecast here, is likely to outstrip this supply. And you can see that deficit is going to continue to grow out to 2030 and likely beyond that. Of course, as we know, higher prices are necessary to provoke the required supply response. The higher the underlying commodity price is, the more likely that the economics will stack up for projects and they'll get the approval to come online. And of course, interestingly as well, we know that lithium-ion batteries are key components within electric vehicles, and that's been one of the major use cases. But Macquarie recently stated as well that they see a secondary market for all of this lithium, for energy storage systems. Of course, the secondary market is only going to drive greater demand, which means there's going to be an even more renewed focus on the lithium sector. And building on top of all of those structural drivers for the longer term demand for lithium ion batteries and lithium more broadly, of course, recently we've seen more and more governments really driving this transition towards net zero, hopefully by 2050, but there's been a range of different initiatives and focuses from governments around the world. We know that the EU is one of the leading regions that are really trying to push this transition towards carbon neutrality. But Joe Biden just recently over the past few weeks set a new goal for 50% of new US vehicles to be electric by 2030. They've outlined a plan to tackle this climate crisis by cutting emissions and tightening pollution standards for cars and trucks. We know how much of a renewed focus there has been on ESG. We know that there's a significant amount of interest on making sure that investments are ethical. This has really picked up pace over the past couple of years, but it's a trend that's going to continue to grow in importance as we move forward. We know that climate change is a discussion that continues to pick up interest. We know that investors are continuing to be more and more cognizant of how their investments are stacking up and whether they align to their interests and to their values. And so, of course, this is going to become more and more important. When the White House announced this recent plan over the past few weeks, was a real catalyst for this next leg up for many of the ASX Lithium stocks and many of the other EV battery material companies. It wasn't exclusively limited to just the lithium companies, but we've seen rises in graphite and nickel and cobalt producers as well, particularly for many in the junior space, because if they are able to come online, they've got a fascinating runway and pathway right ahead of them. And so you might be wondering then, with this backdrop, what does this actually mean for the current companies on the market that are either producing in the lithium sector or looking to come online as juniors or as explorers? You can see here, this was the performance of some of the leading ASX lithium companies in financial year 2021 that ended on June 31. You can see here, just taking a snapshot, many of these companies had phenomenal years. Of course, throughout 2019, the lithium price had bottomed. We know that producers and companies that are looking to produce commodities are going to move in a correlated manner to the underlying commodity price. And as the underlying lithium price started to rise over this past period and we got that price signal, many of these companies had huge runs. You can see both Pilbara Minerals and Orocobre. Both of these are actually in the top 5 ASX 200 gainers of FY21, the benchmark index. And then along with that here, many of these companies just had absolutely phenomenal years. So you might be wondering, after that run up, how have they gone into this first part of FY22? Has there been more legs to grow? And this past month here, this is a bit of a snapshot. As far as the eye can see, wherever you can look on the ASX Lithium and ASX EV battery material sector, these prices have been rising higher and higher. Lake Resources, Core Lithium, Orocobre, Liontown, Pilbara, Sayona, Vulcan Energy, Galaxy, Hawkstone. You can see the prices here have been absolutely phenomenal rises. Of course, after such a rapid uplift, there is questions about valuations. Is the market getting a little bit frothy and a little bit too exuberant in the short term? Each person's going to have a different perspective and different lens on how they approach that question. We'd love to know your thoughts, so drop in a comment below if you think this is only just the beginning and if there's more legs to run, or whether you think that it started to get too frothy in the short term and a pullback is likely. It's a really fascinating period to say the least. We know that Orocobre and Galaxy are looking to complete their merger to become a top 10 lithium producer as well later on in this month. Many of these companies here, you'll notice as well, are pre-production, which means if they do come online, they still do have that longer journey ahead of them. Of course, it doesn't mean that every company is going to go online. Companies that are pre-production, pre-commercial are going to be inherently risky and inherently more volatile than more of the stable blue chips. So it is just worth having that lens and having that note when you are looking into companies in the sector. It's a fascinating period, as we mentioned as well. It's not just exclusively limited to lithium. Many of the EV battery material stocks have really started to have that bid. And the question will be, if governmental support and a more accommodative regulatory environment continues, can this be really just the start of the journey as demand for EVs picks up pace? We know that EV global penetration is still under 5%, which means that if these targets are going to be met as we move towards this net zero target by 2050, there's likely to be a huge amount of EVs that do come online. And that then leads us back to this long-term perpetual deficit discussion. You can see here some of the narrative from Macquarie. They upgraded the outlook for battery demand in both EVs and the energy storage systems, which we discussed earlier. They forecast a wider market deficit for lithium in this year's 2021, but they expect this deficit to continue to grow into 2022 and 2023. Of course, there are going to be supply responses, but they forecast that it may be too little, too late to contain this price. Eventually, supply will come online, but the question is, will demand continue to outstrip supply, particularly if the EV adoption picks up at a more rapid pace than initially forecast, which is what we are seeing in this current near term. And so then just having a look at some of these 4 key pillars that Joe Biden and the White House outlined as core actions for the nation in the US. Of course, this was a focused US policy response. However, governments around the world are going to be looking at it with a similar type of lens. So it makes sense to consider this, and it also gives a bit of an insight into some of the sectors and some of the areas within the EV trends that might be interesting potential investments. They're looking at electric vehicle charging stations. We know how important infrastructure are going to be, and of course, infrastructure is going to really help to drive that rollout. If there's more charging stations, if there's more infrastructure, if the cost to actually run electric vehicles is cheaper and that comes down, then eventually the cost benefit for individual users will outweigh ICE or internal combustion engines, and then more and more users will start to purchase potentially electric vehicles. Of course, consumer incentives, subsidies, and potential further benefits that will drive individuals to buy more electric vehicles are going to be more important. We haven't yet seen that type of response on a government level in Australia as much as we have seen in other nations around the world, but we'll be watching for this. Of course, the domestic manufacturing supply chain is important, not just from a localization of supply chain focus, but there is continued different aspects that we can get exposure to throughout the supply chain. Whether it's the miners themselves, those who are extracting the raw resources, whether it's a bit more downstream, those who are potentially doing the processing, or the development of the actual lithium-ion battery cells as well. There's a range of different opportunities to capture value within the supply chain, and these are all areas that investors could potentially look at. And then, of course, innovation. Innovation to really drive that next generation of clean technologies, not only in the lithium-ion battery supply area, but there's a range of different areas that are really going to help to drive this renewable transition towards that stated net zero goal in 2050. It is a fascinating period. There's so much to unpack. We'll continue to watch it, and it is truly a global megatrend that's likely to continue to grow, not only just over this next decade, but for decades beyond. If you did enjoy the video, don't forget to give it a thumbs up. Feel free to share it out. We're the ASX Investor channel, and we make daily videos talking about the stock market investing, and we find and analyze the best growth stocks. So if you haven't yet, hit that subscribe button. Make sure you've got your bell notifications turned on as well, so you won't miss a daily episode, and we'd love to have you join the community. This past period, we've looked into a range of different growth stocks and interviewed a range of different CEOs, so we'll leave links to those up above. And a reminder that I'm not a financial advisor. Nothing we talk about on the channel is financial advice, and nothing we discuss is a financial advice. It's all just that general discussion to be a starting spot for your own research. We'd love to know your thoughts about this lithium uplift over this past period. Thank you so much for joining us. For now, stay well and happy investing.